Okay, great. Thank you, everyone, for coming to the Climate Health Society's Professional Speakers Talk Series. I'm very happy to say that we have Peter Fusaro speaking today. A little bit of background. Peter is a New York Times bestselling author and global thought leader focused on climate change investment and the energy transition beginning in 1970, the first Earth Day. Is that correct, Peter? The first Earth Day?
That's correct.
That's amazing. He works on energy and environmental issues that enhance economic development and human health. He advocates for impact investing. I do hope you'll talk about exactly what that means. He has been involved in many climate tech startups as an advisor. He is founder of the 25th Annual Wall Street Green Summit, held in New York City each March, which is focused on the nexus of finance and technology. I attended it this past year. Fascinating, very interesting. Not my area, but I learned a lot of connections there. And he has mentored over 300 young professional women in sustainable finance for the last 30 years. Peter, thank you again for joining our group and our little startup. So go ahead, take it away. Let me make sure that we are recording. We are recording, and I think we're all set. So welcome. Thank you.
Thank you, Emily. Basically, things are changing. Things are getting worse. Last year, we went through 1.5 degrees C, and that's not a good thing. So we're seeing more extreme and unpredictable weather events, sea level rise, warming temperatures, intense storms, droughts, floods, forest fires, species loss, fish catch declining. These are all caused by climate. This is Science 101. The outliers are, which I've worked on 25 years ago, the correlation of infectious disease and climate change, something that's not carried by the media at all, even though they're hysterical about hantavirus and Ebola these days. The bottom line is the carbon intensity is rising, mostly caused by the energy patch. I spent the last 50 years in the energy industry working on energy and environmental issues. Energy is 73% of greenhouse gases. And as we've seen with this Iranian war, the heavy dependence still on fossil energy, although renewables continue to scale. Why? Because the costs have reduced dramatically in the last decade and a half. Over 95% reduction in solar energy, making it globally deployable. Over 60% reduction in wind power. And that's the game, bending the cost curve, as we call it on Wall Street. If you are able to reduce the cost of renewables and clean technology, you can scale and commercialize more rapidly. So what's changing now in finance? Climate disclosures are now financial disclosures. Although the SEC pulled back its regulation on climate disclosure, it is still on the balance sheet. We're seeing AI in many of its manifestations. And one thing people are starting to figure out is quantum computing and AI are going to accelerate a lot of the changes. Nature-based solutions, that's protecting forests, species, fish catch, that's growing in importance as a financial value is put on these forests, these nature-based solutions. I'll give you an example. On forests now, we're looking at $40 a ton for carbon offsets. Who's buying these offsets? Folks you wouldn't think of, like DocuSign and Airbnb. And they're doing this volitionally, voluntarily. So what we have today is an acceleration in climate tech and clean energy that's taken decades. Fund managements had to train strategies. We don't talk ESG anymore, but it still is ESG. So we're now looking at new ideas to manage climate risk and look more at adaptation, which I'll talk about a little later, which is going to become much more important beyond climate and mitigation in the next decades. So my holy trinity impacted by climate is energy, food, and water. Energy is an $8 trillion business. Food is a $6 trillion business. And water is a $3 trillion business. In my opinion, there are no disruptive technologies. Change is incremental. I know Silicon Valley likes to preach disruption. I used to meet with Kleiner Perkins, a very big venture capital fund from Silicon Valley. And they said, Peter, we've mapped out 60 disruptive technologies. Well, frankly, the real change is incrementalism. It's not going to be disruption that changes any of this. Things move from the outliers to the center and take time. What are the sectors today where we're seeing most of that investment? Today, it's solar energy, particularly solar farms, wind power, although in the US, I put a big question mark on where we're going, but the rest of the world is moving forward on wind energy, batteries in many different technologies, not just lithium ion, and electric vehicles. If we had deployed more electric vehicles, there'd be less of an oil shock this time around. Investment was up last year, despite all the negativity in the press. It was up 5% to $2.2 trillion. So far since the Paris Climate Accord, we've seen $10.2 trillion invested in this sector. It is estimated by Bloomberg New Energy Finance that by 2050, $215 trillion will be invested. So we're still seeing substantially less investment that's needed to mitigate a rising temperature. The leaders today are still China and the US. We're still the largest deployers of clean energy, the EU third, and India. And despite all the manifestations that we're going back to coal and we're going back to oil and gas, we're actually moving toward cleaner energy in the United States as well as the rest of the world. It is extremely environmentally beneficial for human health, and it is also becoming extremely affordable. So as I mentioned before, energy is the lead dog on greenhouse gas emissions. 73% of greenhouse gas emissions are in the energy patch. That's followed by agriculture at 12%, industrial processes at 5.9%, waste at 3.3%, and land use at 2.5%. So energy is still where the focus is. Atmospheric concentrations of CO2, unfortunately, continue to rise. We're 39 billion metric tons, and if we didn't have forests and oceans, it'd be over 52 billion metric tons. Forests and oceans are carbon sinks. So we're now at 430 parts ppm and rising. The largest emitters that I just mentioned, China, the US, the EU, India, and Russia. Until we move further away from fossil or use cleaner fossil fuels, we'll still be emitting a lot of carbon into the stratosphere. By burning fossil energy, we're releasing carbon emissions into the stratosphere that will last there for decades. Today, the focus is becoming more on decarbonization. What does that mean? Taking the carbon out of industrial processes. For example, hydrogen for steel manufacture. That's being done in Sweden right now. Hydrogen for transportation, not just hydrogen fuel cell vehicles, but trains in Germany and France, boats in Norway and Japan. So we're seeing a hydrogen economy emerge. It's still slow. Hydrogen is the most abundant element in the universe, and it has no emissions. It makes water vapor. Some sectors can't innovate fast enough, such as shipping and air travel. I briefed the airline carriers many years ago, and their cycles are about 40 years. They've had a 25% bump in fuel economy due to composite materials and better aviation metrics, but they can't innovate fast. And shipping is even slower, and global supply chains are still dependent on ships, not planes as much. So we still have two sectors that are roughly about 6% of greenhouse gases that can't innovate fast enough. There's been a shift in climate investment. So climate investment is now moving beyond just what I discussed, renewable energy. It's focusing on things like reliability of the electric supply grid. It's looking at AI for data centers. No one knows how much capacity is needed for AI for data centers. In 1992, the Energy Policy Act deregulated electric utilities. That made electric utilities in the US not invest in infrastructure. What they actually did invest was buying each other. So in those days, there were 110 investor-owned utilities. Today, there are 40. So they're behind the curve in anticipating the load growth for AI. Grid expansion. We see a number of projects to bring the grid into the 21st century. We still have electric wires in the Northeast that are 120 years old. And energy storage is becoming much more important and becoming rapidly deployable for solar energy usage. For example, when the sun goes down or the wind doesn't blow, you use backup generation with batteries, and the batteries are getting bigger, more efficient, and cheaper. But AI is still driving power demand. Rapid and unpredicted rise in energy demand, as I just mentioned. Hyperscale data centers consume a lot of energy 24/7. They need a continuous, stable supply of power to support their operation and for their cooling systems. They are being built all over the country, although there's a lot of local opposition to where they're going to be sited. They do consume vast amounts of electricity. And as I mentioned, batteries are changing beyond lithium ion. Lithium ion is in your cell phone, it's in your Tesla, but we're looking at other technologies, airflow batteries, zinc air batteries, solar ion batteries, solid state batteries, and much more. Battery technology, as I mentioned, is becoming more affordable, larger, and cheaper. So the large scale play is to bring a crucial role in stability from renewable energy generation. And that ensures that on peak demand days, like hot summer days, we can meet electricity demand and ensure that the grid is efficient and we don't have brownouts and blackouts. So batteries are really there to smooth electric power load for those peak summer cooling days and winter heating days. For example, in Queens, there's a company called Perfect Power that manages load using battery storage. And they make quite a bit of money on arbitrage, but they also are providing a service. Solar has made a worldwide breakthrough. 25 years ago, solar was basically unaffordable. The payback periods were too long. Today, it's a game changer. There have been cost reductions of over 95% with higher efficiencies, global deployment, making that affordable everywhere. We're now seeing floating solar in places like Singapore. We're seeing technological breakthroughs such as double-sided panels. And we're seeing one of my favorite things, building integrated photovoltaics, building solar into the skin of a building. So some hotels in New York, one in Soho, use building integrated photovoltaics. The school in Newark uses the same thing. This means you're generating electricity in the building skin. And here's the bigger thing. Solar creates jobs, well-paid jobs. My neighbor works for a very large private equity fund called Brookfield Asset Management, and they're deploying solar in Ontario, Vermont, Massachusetts, and New York. They're an $8 billion private equity fund. This is just a nice little shot of where we are. So solar's created tens of thousands, almost 270,000 jobs. It's created a lot of gigawatts of power. And the US is number 2 in solar. And if you go to Denver, you'll see lots of solar farms as you fly over different cities. So solar energy, cheaper, affordable, and becoming much more efficient. And that will lead to a reduction in greenhouse. So what are the major states here? California, the leader. Texas, which had the first, what we call renewable portfolio standards under Governor Bush in 2000. Florida, North Carolina. So solar is becoming an abundant resource. And a lot of the top corporate solar users, such as Meta, Amazon, Apple, Walmart, et cetera, are deploying more solar energy. Nuclear power we have to talk about. Nuclear is a very expensive baseload capacity. So we've only built since 1978 one large-scale nuclear plant. It costs $31 billion with cost overruns, federal loan guarantees, and delayed construction. That's large-scale nuclear. Our nuclear fleet in the US is still quite large, over 90 plants still operating. But what we're starting to see is small modular reactors, SMR. They're gaining traction among investors, but their technology is still unproven. The idea is the goal is to complement the intermittency issues with renewable energy. There was a very large plant to be built outside not Amarillo, Texas, and they were going to use solar, batteries, natural gas, and nuclear. We're looking at nuclear as a carbon-free baseload fuel for data centers and AI facilities. The problem is, which no one wants to talk about, there's a lack of a nuclear engineering workforce. We haven't built a plant except one since 1978. So we're not seeing that human capital needed. Many years ago, I worked with the South Koreans. They have the best nuclear fleet in the planet called KEPCO, Korean Electric Power. I tried to bring nuclear engineers to the United States. Couldn't do it because of national security issues. So all this hype on nuclear, we better have the knowledge capital to build these plants. Because right now we don't. Energy efficiency is still the 800-pound gorilla in the greenhouse gas space. It is a huge untapped market. Many years ago, when I worked in the mayor's office here in New York City, I worked with Con Ed and Brooklyn Union Gas, now National Grid, on deploying more energy efficiency into local communities. It is a very heavy lift called payback. So lighting retrofits are very easy to do, but if you start moving into heating and cooling, it becomes a very difficult operation and more expensive. Here in New York, we have 950,000 buildings. All new construction is green. It's all LEED certified. That's NewCo. It's the building retrofit market. In New York, 100,000 buildings still burn on oil. So we're going to see a greater use of AI for building efficiency, using machine learning to map energy flows in the building envelope, using something called digital twins for heating and cooling systems. Digital twins can model HVAC systems, lighting systems, and it's kind of clever because it can show you what can change and how much savings you can make using technology. So we're seeing a lot of these digital twins now in the energy efficiency space. The climate change landscape has also changed. Energy companies plan in 40-year cycles. So we have the US today as the world's largest oil and gas producer. Why? Due to technology, horizontal drilling, 3D seismic, fracking. These all create more molecules of oil and gas. I was in Bermuda at a hedge fund conference speaking, and a gentleman was talking about finding and production risk. And then I talked to him later. I said, sir, there is no finding and production risk. We know where all the molecules are by using technology. Coal's a different story. It's a 19th century fuel. It is extremely dirty. In the US, we used to burn 55% of electricity baseload capacity as coal. Now it's down to 15% due to economics. So even though this present administration is promoting coal, there's been one coal plant built. Not too many. They're closing them because of economics. We're also not going to be drilling in Alaska. Why? Because it's too expensive. So all the hoopla about Anwar and opening up other energy finds, we're not going to see that happen. We are the number one producer in oil and gas today because of technology in West Texas and North Dakota, basically, and California to some degree. As I mentioned before, we're number 2 in renewables after China. So what's really the game today is better technologies to commercialize. Large energy companies are buyers, not creator of these climate technologies. They are not innovative. They are risk averse. They are not entrepreneurial. What they are large capital deployers. They buy technology from the climate tech sector as it scales and commercializes. So we see not an IPO market as being very robust, that's initial public offering. No, we're seeing large companies buy tomorrow's technology as it commercializes and scales. And that's a good thing. Tech companies are a little different. They are transforming the energy landscape. Major tech firms like Microsoft, Google, Facebook are investing directly in energy markets. And they're developing what we call small scale, microgrids. They're also acquiring more renewable assets for energy security. There's now, under the present regime in Washington, a more highly developed focus on domestic energy generation as the US retracts itself from the rest of the world. However, we do sell oil and something called liquefied natural gas. We are a large gas producer to Western Europe and other countries. What are the challenges of these financial institutions? A lot of uncertainty on decarbonization efforts. Are these going to pencil out? Are these going to be affordable? Can this be done? The bigger question is the lack of useful data for decisions. The data sets are not uniform, but they're getting better due to the use of AI. There's also a very confused regulatory system. We have 50 state public utility commissions. Here in New York, we have a public service commission and little federal oversight. The administration has kind of neutered FERC, Federal Energy Regulatory Commission, from doing much. So we're seeing a lack of investable products for climate alignment. I mentioned the 2.2 trillion, which frankly should be 6 to 8 trillion. And this money is coming from who? It's coming from strategic investors, large energy companies, sovereign wealth funds, impact investors, rich family offices. They can deploy capital and take greater risk. So we're really in the beginning of a startup world for climate. It's accelerating throughout the world. More funds are being formed. In the US, we have 78,000 startups. In India, we have 66,000 startups. New York has become a center for climate tech with incubators and accelerators and an ecosystem. But more technology is coming. The bad news, many of these companies will fail. They will be unable to raise capital, they'll be unable to scale, but some will succeed. And there will be some unicorns. That's $1 billion climate companies. But as I mentioned before, this will mostly be through trade sales. That's other companies acquiring them. And we have hubs throughout the world. Israel has Startup City. The country of Colombia has 40 of these hubs. Brazil has hubs. So we have now an ecosystem growing for climate tech throughout the world. And an interesting phenomena of Israelis investing in India. India is a prime market for a lot of climate technologies. I just want to mention, I know this is the Climate Health Society, the correlation of infectious disease and climate change. I know I'm preaching to the choir, but it's near and dear to me. I've worked on air quality issues such as taking the lead out of gasoline with EPA, energy efficiency programs, working on environmental impact statement for LNG safety and siting, working on the Prius with Toyota. So it's very important to me about air quality issues. And as we've seen, there's been a great scientific evidence of a correlation between climate change and the spread of infectious disease. Things that were eradicated, like hantavirus and diphtheria, prior to 1990 are back. We're seeing shifting rainfall patterns, extreme weather events that can't be predicted and becoming more frequent. And we're seeing an ecology of pathogens, vectors, and hosts growing. So warmer temperatures expand the range and activity of mosquitoes and ticks that carry diseases such as dengue fever, malaria, West Nile virus, Lyme disease. Waterborne, climate change, flooding, droughts will contaminate water aquifers and supply, increasing cholera, typhoid, hepatitis A transmission. So the tube focuses on this ship with the hantavirus. When I set up during COVID, it was the airplanes done it. That comes from King Kong. The air travel is global and will transmit disease. There's also foodborne, rodent-borne, and fungal diseases. I won't dwell too much on this, but there's a direct correlation, and we're not prepared for this, unfortunately. We're very reactive, particularly under this regime, CDC. So I want to focus a little bit on the change now from climate mitigation. We've worked for decades on reducing pollution in the air through emissions trading schemes, putting a price on carbon, putting a price on sulfur dioxide, putting a price on carbon monoxide. And these are fungible trading markets. So California, for example, has a market for greenhouse gas emissions. It's called AB 32 implementation. I worked on that and it works very well. It's reduced the emissions footprint decade by decade in California. It goes to at least 2040. So most of the mitigation schemes have been focused on reducing pollution through trading systems. The EU has something called the emissions trading scheme. However, what's really occurring, because we're seeing a more rapid increase in temperature, a more rapid deployment of more emissions at 430 parts per million and growing, mitigation is centered around what people should do. Adaptation is more important. It's where people have to respond to the climate crisis out of their own self-interest. This is the world we're moving into, and we are totally unprepared for this. Today's markets for climate adaptation are deploying only 0.25% of all capital. That's not a good thing. The bottom line is there's an opportunity to drive more innovation into companies that improve the quality of life for humanity as this crisis continues. It's not going to go away because people deny science. It's not going to go away because there's temperature rise. It's not going to go away because there's carbon intensity. It's very interesting, even in states that don't have climate laws, the board of directors of energy companies are asking questions on climate intensity. They want to know. As I mentioned before, energy companies think in 40-year cycles. They look at this as a blip. They took the lead out of gasoline because the EPA told them to take the lead out of gasoline. This administration doesn't have any of those climate mandates. It's still occurring. And why is it occurring? Because you're not going to be able to attract young employees if you're not doing the right thing. So Exxon is the 10th largest renewable purchaser in the country, volitionally. So companies do things to attract young talent that are green and sustainable. They just don't talk about it loudly anymore. So we've got temperature rise. Some of the models I've seen are looking at 2.5 degrees C by 2050. As I mentioned several times, we blew through 1.5 degrees C last year. Some of the models see warming at 4 to 6 degrees C, very bad thing. Some of the models look at loss of all global cloud cover by 2060. And some of the models on epidemiology look at 95% mortality of humanity by 2100. These are scare tactics. I tried to message this, it doesn't work. So I pivoted and said, well, you can make money doing the right thing through green finance and green trading. That worked for a time. Now ESG is now the pariah term. We're not allowed to talk about it, but it's happening anyway. It's just in a different guise. We'll just call it sustainable finance. So where we are today is what I consider the end of the beginning. It took decades to bring these issues front and center for policymakers, for the business community, for Wall Street to actually start deploying capital. So what do we have? Obviously, the rise of an overhyped AI technologies, which is going to drive unprecedented electricity demand. No one knows. The numbers I've seen are doubling of demand in the next 5 years. I can't fathom anybody building that fast. And it's compelling energy suppliers to innovate and expand their infrastructure. As I mentioned before, storage is still the key to renewables in the grid, and that is growing. It is more affordable. It's getting large scale. It's using different kinds of battery technologies and fuel cell technologies. In my opinion, nuclear is too long dated. It's 2032 at the earliest, perhaps 2035. As I mentioned before, we don't have the classes of nuclear engineers graduating anymore to build these plants, the small, medium-sized reactors, SMRs. So where we're going is the future is electric and sustainable. And I'm open to all questions. Thank you very much.
Thank you so much, Peter, for that excellent talk. If you have a question, please put it in the Q&A. And I have a question. Is the loss of the IRA slowing the energy transition to renewables, or is it still kind of forging ahead?
it's forging ahead and it's not slowing down. Um, those, when you have an administration that doesn't like renewable energy, you can't do much about it. But these projects now stand on their own. The initial idea behind this was to reduce the cost of capital. It was too expensive to deploy solar energy. It isn't anymore. So no, this, as I mentioned, Brookfield Energy is building their portfolio out. There are many private equity funds that are building out energy portfolios. You're seeing the tech folks actually getting more involved in owning projects for their data centers. So no,
So,
it didn't have that negative impact.
and in terms of finding legal or regulatory ways to block solar, is that a concern of yours in the current situation?
Well, that we're talking federal versus state. And solar is, as I showed on that slide, is being deployed in many different states at different capacities, basically due to the renewable portfolio standards that those states implemented, which meant a certain capacity of generation had to be renewables. Yeah, there'll be lawyers, there'll be court suits, but the train's unstoppable. This is moving. It's moving because it's economic. Frankly, the one thing that the Iranian war has showing is we're much too dependent on fossil, and we should have moved further and faster to fuel cell vehicles and EVs to reduce emissions.
Right. You mentioned adaptation and the almost non-existent investment in adaptation. This sounds like an area where people with ideas, particularly those ideas that protect human health in an adaptation fashion, might find interest and traction. Could you expand on that a little bit? And I also want to say, you knew Paul Epstein, and the crowd here today may be too young to recall Paul Epstein, but he was a very, very early pioneer, physician pioneer, and he created the Center for Health and Global Environment at Harvard Medical School. And so expand on that if you can a little bit, the link between adaptation and health.
Yeah, in fact, there's a fund that's focused on that. It's called Maroon Ventures here in New York. It's the first fund I've ever seen that linked human health to climate investment. So that's needed, necessary, and that's going to be an educational hurdle because a lot of folks have not made that comparison. They look at health as an outlier and they don't understand the cost structure. I mean, there's a direct correlation. So there are some funds now, and one is she's already active. She's raising capital again. So there's some funds starting to move into human health and climate. On the adaptation side, at my conference, we had Adaptus, a fund from Toronto. He's small, he's getting going, but we need more activity to start looking at how do we adapt to a changing climate. It is a factor. It's not going to change. There's no plan B. We can't leave the place. Everyone wants to go to Mars. So we have a situation where the capital markets are still deploying capital. Now, what they're doing, they're deploying a lot larger ticket size. They're deploying bigger amounts of money for larger projects. So that's straining a little bit in the startup world, which I was describing before.
I'm going to ask one more question before we get to a question from the audience. How can the Climate Health Society, how would you recommend that we bring the message to the investor community that the health co-benefits perhaps could be quantified and then monetized as almost like an offset, if you will? And what would be your advice on how we can better get that going?
Well, the first thing I would suggest is to try to get more speakers from Wall Street and the funds. Now, I can help you on that. I think that would be helpful, socialize this more. I think it would be helpful to start messaging this more because, like I said, it's too siloed.
Yeah.
I've seen one fund on climate and health, and she invited me to dinner, and I was with her investors, and I just said, "You're the first one I've ever seen." The first one, that was last June.
Okay, appreciate that. And we'll work on that because I agree with you. I think we need to get out of our silos and talk to each other. The next question is from David Introcaso. He is works very robustly in the policy, healthcare, climate space, and he wants to know why does the $6 trillion in high-tech healthcare industry, he's speaking specifically about healthcare, 8.5% of all greenhouse gases in this country. Why do they ignore the sustainable electric future? I'm not sure what insight you have on that, but any you could provide.
Well, hospitals, big energy users, and they all seem to have sustainability programs. But they have 24/7 load. So they're actually ripe for a lot of innovation. I go to NYU Langone, so I haven't seen a lot of innovation there. It works. But it certainly would be an opportunity to start moving into more climate tech. They're using a lot of electricity for machines, for operating rooms, for staff, patients. Seems to be an obvious link. I know there are sustainability groups within the healthcare industry. I just haven't seen them surface in the climate tech sector.
Right. Second question, also from David Introcaso. It's not 0.25% in is not 2.5% in adaptation a gift. Building resilience is a cause, not a solution, and distracts from the only solution, decarbonizing. Or do you feel we really need to do both?
Oh, I think we need to do all of the above. And I mentioned nature-based solutions, which is getting more traction now. What does that mean? I was involved with a company using biotechnology to repurpose distressed land in Peru for indigenous people. This is impact investing. We paid the people to harvest their crops and also grow trees. And then we sold the carbon credits to Amazon. So the point being, there are ways to look at differences and broaden the pie. I'll give you another example. Mangroves. Mangroves are all over the world. They're carbon sinks. They grow in salt water. We have to look at some things that are a little esoteric, maybe. I worked on sustainable fishing, growing Campachi in warming waters off coast Panama. So I don't think it's one thing. I think it's everything. I think it's energy, food, water. It's how we use technology. It's recycling. There's a company I'm involved in Serbia that is using wallboard and recycling that into compostable products. So I think we have to look at the waste stream. We have to look at the supply chain in a different way, a different lens. This is a massive undertaking, changing how we do business.
Now, we had a couple points in the chat. One is related to nuclear. Is your posture that nuclear is too technologically difficult to deploy in a meaningful way?
Okay, so I mentioned I work with Korean Electric Power. They're the best nuclear fleet on the planet. They built in China, they built in the UAE. The French had probably the most robust nuclear presence on the planet, about one time 60% of its power. Arriva has built in Finland, cost overruns, behind schedule. I mentioned the Georgia plant, Georgia Power, cost overruns, behind schedule. So large scale nuclear, I think, is off the table. I think it's way long dated. It doesn't work. It's risky. So then you go to the SMR, the little guys. Well, we haven't built them. So let's see how they work. There are 11 companies in that space in the US right now. A lot of them are going to die. One company out of the UK came here, and I won't mention their name. They're making money on magnets, selling magnets, not on nuclear. They're making zero money on nuclear. So as I mentioned, I think it's very long dated, 2032, 2035. I think it could be very expensive. I wish it would work because it does not make carbon emissions. So that's a good thing. But I think we have a situation.
Capacity.
Yeah, where?
Right.
And
even though Gates and other very large funders have supported small nuclear reactors, and Facebook, I don't know who they all are, you don't see that as, you can't throw enough money at it. Is that what you're saying?
I don't think so. And I'll tell you two things. Nuclear power is 20% of US generation capacity. That's a given. I think the dirty little secret is we're going to burn a lot more natural gas. Now, right now, combined cycle turbines are backlogged about 6, 7 years, but we're going to build burning gas and renewables, and they're not competitors. They're going to work together.
Okay, carbon capture and storage. We to get below 1.5, is it not true? We're going to have to suck back stuff that's already up there one way or another through carbon sinks, or do you stand on carbon capture?
Too expensive. It's just very expensive to do carbon capture and storage. It's about $400 a ton. Where it makes some sense, I looked in as I went to Midland, Texas, and spoke at the Petroleum Museum. They inject CO2 in the ground to take out more oil and gas molecules. So that's kind of an economic reasoning. Otherwise, it's expensive. The other thing you're kind of mentioning is a company called the Air Company that's sucking carbon out of the air. We'll see. It's one company. They raised $100 million. They were first making vodka, which I thought was very silly. So, these things are very long dated. You have to kind of look at the cost curve. Some of the technologies are up to $1,000 a ton for mitigation. That's ridiculous. It's too expensive.
Yes. Okay. Another comment is the overshoot question. Right. Too expensive presently. Right. So do you see a world where there could be some sort of innovation there that would, as you say, reflect in the cost curve and be a positive for some sort of carbon, big suck back?
Well, I actually think the overlooked market is something called hydrogen. So I was at the Hydrogen Council meeting. They're in Brussels. They've got about 200 corporates on board. As I mentioned, trains, ships. I worked on the Prius. I've been in their fuel cell vehicle. I drove it around the Javits Center. Its emission is water vapor, H2O. I actually went and looked at it. So we should be pushing hydrogen if we want to look at real solutions to the climate. It's the most abundant element in the universe. Here's the problem. It's expensive. It's $11 to $12 a kilo. It's not globally deployed. There's no infrastructure to refuel hydrogen fuel cell vehicles. It's difficult. So that's a chicken and the egg situation. That's where I think we really need to go. Otherwise, we're going to look at more renewables, more natural gas, less coal, except in other countries. Now, one thing that shocked me years ago is almost every Asian country has built coal-fired plants all over the place. China burns 80% coal, including metallurgical coal. India burns a lot of coal. This is not a good thing.
Are there levers to change that, or that's not going to happen?
Not going to happen. They under long-term contracts. It's an economic development issue, keeping the cost of power down. As they industrialize further, they're going to use more coal. They have been using more coal. That's a problem.
So here's a question about risk and externalized risk for property insurance, and particularly for the healthcare sector. How often is that risk calculated by insurance markets, insurers?
They've been very remiss. On the front line has been the reinsurers, as I mentioned. There's a company called Risk Thinking AI in Toronto. A friend of mine runs that. He's actually been pricing what does the climate risk really mean financially on a corporate balance sheet. So I think, but that's he's a guy, Yale professor, Goldman Sachs, created a company called Algorithmics, backbone of Wall Street's risk management. And yet he's one of the 2 companies I'm aware of that's even doing this. And there are a handful of insurers that are involved in carbon reinsurance.
Thank you. So I want to remind everybody, if you are not a member of the Climate Health Society, please consider joining us. This is the link in the chat. It'll take you right to the join page. It's $100 to join. We will be having an all-member meeting on October 22nd. If you are in the medical space and you happen to be in New York City, You're in, what month is Wall Street Summit, Peter?
Next March.
March. I attended it this past year. You'll be amazed at how much there is there that is relevant to clinicians, healthcare providers, health system leaders, and opportunities to learn about how perhaps to become a startup yourself. Ideas are generated there. Super interesting and lots of great people. Peter, is there anything else you'd like to add specifically around how we as the Climate Health Society can influence other sectors around this health issue?
It's messaging 101. It's engaging the people to come and speak at webinars like this. That's the two things which I said before.
Yeah. Terrific. Well, I'll ask the attendees if there are any further questions. We can unmute someone. We have about 9 minutes left. Let me know if you'd like have a specific question for Peter. And Peter, I cannot thank you enough. You're our first Wall Street guest speaker, and I hope you will be just the one of many, and to join us so that we can work together on this big problem.
I agree. Thank you very much, Emily, for inviting me.
And I'll see you next March at the summit.
Okay, thank you.